Bryce Carter, CIO and financial advisor with Financial Strategies Group in Okemos, is joining us again today. All right, Bryce, let's talk about interest rates. How are they affecting the real estate market?
Yeah, this is the big one, right? So it's directly correlated. You've got interest rates, which we rely on to finance our mortgages. Let me just give you an example. So if you were to buy a house last year at, let's say, 2.88%, that's not unthinkable. Yeah. And now you're buying now at 5.88%. Yeah. On a $250,000 home, the difference in your monthly payment is $400 a month. So if you could only, that's all you could afford, now the amount of home that you could afford goes down. Yeah. So if you could afford $250 before, maybe now only you can afford $200. And that's putting downward pressure, has been on the real estate market. I think will likely continue to unfold.
Okay. Well, with the market starting to show weakness, what do you think that means for the broader economy?
Yeah, real estate is for many people the largest asset that they have. Yeah. Usually your home and then maybe your 401k. Those are the largest two things. So as your home starts to go down in value, you inadvertently feel weaker in a financial position. So you start to second guess things like vacations or maybe buying a cabin or maybe that camper that's pretty expensive, right? Yeah. So spending starts to slow down and it kind of has a trickle down effect, and I think we're already starting to see that unfold.
Okay. Well, how will prolonged higher interest rates affect home buyers?
So this is the thing. Is a lot of people think that this is temporary, but these interest rates that we've had in the past, from really 2009, 2010 onward, have been artificially low. Yeah. That was not the normal. We're now entering the normal phase, and so people have to shift their mindset. You're not probably going to get 3% anymore on a mortgage. Your new mindset needs to be 5, 5.5, 6%. That's normal. It's going to hurt long-term prices, but that's okay because we really couldn't stay at that long-term super low rate forever. It just wasn't sustainable.
Yeah. Okay. What other ways do you think it's good for people to kind of assess their finances and maybe somebody who might think they're not making enough money to invest? Yeah. There's always something to invest.
There's always something. And I will say one of the pros of these rising interest rates, it makes it easier to make a little bit of interest, right? So bank account rates start to creep up a little bit at a time. We all remember seeing 0.01 as our checking account interest rate, right? So those start to creep up. So it makes it a little bit easier to invest and save things and earn at least a couple percentage points of interest.
Yeah. If you're looking to finally some people put it off for way too long. Got to look at your finances and be honest about it. They can contact you and make some planning. Financial Strategies Group in Okemos. Bryce Carter, CIO and financial advisor. Great talking with you.
Thanks for having me.